Hi everybody, welcome back to our StockTwits Q&A forum. I'm Brittany Umar, going to be joined by Scott Redler in just a second. We're going to be answering your questions live, but before we do that, we want to show you a little something. So check this out, it's a glimpse into Scott's trading world. We'll be right back.
I'm in a little MGM and I'm still in OIH. I bought it this morning at 107.50.
Apple's good.
You don't buy in the first 5 minutes of the day.
I live in Jersey City. I was born in Long Island, went to school at SUNY Albany. As a firm, we are 5 partners and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is in a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is. You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother. All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265, and if they're right, they make money. It's a good setup. Stick with the win.
Okay.
It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Scott, technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade and I could provide for my family.
Where's the breakout? That is the next evolution.
Good afternoon. Welcome to our second annual Conversations with Red Dog and Brittany. I apologize for starting a little late, but those of you out there in Traderland, you obviously know Google reported there was a lot of action. So Google's one of the stocks that I trade actively. I was on the desk just real quickly just to show you how things change. Boom, down to 630, bought a little 630. People thought it was a little lukewarm. Then all of a sudden, 2-for-1 stock split, pops back up to 660, traded around a little bit. And if I was there at my desk right now, I would probably be trying to be long if it stays above 645, and if it gets above 670, I think it gets interesting and we could see 700 tomorrow. But obviously I'm not in front of my desk. I'm here with you guys because this is what we do. We try and add value. We try to ask your questions. We try to, we'll get into Google a little bit further along, but first of all, we have a lot of great questions already all coming in. I don't even want to just keep running my mouth more than I always do. And I just want to go to Brittany, who I'm so happy to have back again.
Thank you for having me. Yes, I'm sure we're going to dive into all of that and more, but let's start with our first question from Benanke and Clyde. He wants to know, SPX, what comes first, 1340 or 1400?
That's a very good question. Sometimes there are times when the probabilities are high that we're going to break down, and sometimes there are probabilities that we're gonna bounce. And last time we were here, we were talking about how IBD put us into a market correction. So at that particular point, sold a lot of my longs, was sneaking net short. We were around 1404 in the SPX. And it made sense to think short and get out of some longs, which what we wound up having a nice 4.5% move off the highs. And then you fast forward to Tuesday, okay, when I talked about the McClellan Oscillator, we were negative 92. We were drastically oversold. You're meaning like you put a little flame on an oil slick and we were bound to rally. So it made sense to cover, and it also made sense to cover some or get a little long there. So if you look now where we're at, we're in a very tricky spot. If you take a quick look at the chart of the SPX, you will see this is when we had this small uptrend or this momentum uptrend that we were following very close. Here is when IBD put us in a market correction. Everyone was asking, what does that mean? What does that mean? To me, it meant get light. It meant to get flat and maybe even get net short. From there, you had a 4-day down move, or actually 5 to look where it started from. And then right when we broke the 50-day moving average, which a lot of people thought we would hold, okay, we broke through it, closed on the lows. That was a day I tweeted out, the virtual trade floor saw, went long some spiders because I figured, that was a good time, and that if we gapped down, we were oversold enough with a minus 92 that I could buy some more. And then what happened? We opened up. We had a lethargic day yesterday. Today was a lot more powerful. And at this particular point, I did sell a lot of the longs that I've been holding. You know, I went after JP Morgan. I've been holding some select other stocks, which we'll get into. So at this point, your 2-day rally, your snapback, your easy bounce, which I call it, I think is in the bag. Now we're coming into this zone where the bears are going to have a lot to prove. I'm going to get at you a little closer look here. This area is somewhere where the question is, do we hold, or do they hold us down here? I want to just show you even a little bit closer. Look at the 10-day and the 20-day coming in. Look at this broken trend line, and that's what we're coming back to. So at this point, selling some into this 2-day move made sense with Google and maybe JP Morgan and the China numbers. Maybe we open up tomorrow. That would be a spot. And if I'm here tomorrow because I have the Boston Marathon Monday, I would think of testing a cute short into this area. And this area is like 1390 to 1394. If the bears have any control or the sellers want to see us make new lows on this year, I don't think they let the market close above this area. That's a very crucial area. Here is your easy type of down move. Here's your snapback. Right now, this is your rubber match areas between the buy and the buyers and the sellers.
All right. Well, Chart Girl NYC, you're obviously a loyal viewer because, Scott, she says that she took the Ren trade with you and wants to see where you see it going.
I don't really love trading the smaller stocks. I like sticking with the leaders. I like sticking with the best of the best in IBD. But this Ren was just a stock that I know very, very well, and it's been setting up a nice pattern. You have Facebook coming out in the next month and a half. This was considered the Facebook of China, and I actually got a little bit more excited about it. I don't know if you guys will listen to me on the radio. Earlier this week, I had a gentleman in from China who runs a group of 500 people from China, and he was telling me that Renren, or RENN, is really the Facebook there, and our Facebook is prohibited. So it made some sense, and we saw our deal with Intel. And more importantly, if you look at the chart, look at the chart here on this stock, okay? First, I'll give you a little bit of a macro view. Macro view-wise, it did come public here, and it was a horrible new issue. Just goes to show you do not rush into new issues. They have a lot to prove. And it worked its way down the entire way. And then finally, okay, it had a nice tradable pattern. What I mean by a tradable pattern is sideways action. Look at this nice sideways action holding up after a move off the lows. So that's what got me interested. My price point, which if you look at off the charts of my price point sheet, was really about $5.90 to $6 because that meant it cleared this type of formation. And if you go to your basic studies and you look, you also want to see volume come in. So what did I see a few days back when I started talking about it? I saw a volume spike. Here's your volume spike. Here's that day. It took a little time to get going, but if you bought a little bit here, okay, which I did, I added above this 620. This is a day to sell a little bit, but hold. So there, you're long from here. You added for cash flow after 3 days. It could, take a little bit of a break. But if you look to your left, which is what I like to do, the next real resistance doesn't come into about 730 area, which is right around there, which isn't too far away. So if we get an up open tomorrow, you could probably see this and you might be able to take a little bit more profits. But again, if you go back to the macro chart, and if you have a macro time frame, come time for this new issue or Facebook, I'm sorry, there's not a big level of resistance all the way back almost to around $9. And this is the type of scenario that could really get charged and continue.
Okay, well, speaking of Ren and kind of using that as an example, we have Mab M1 who just used Ren as an example, saying, Scott, thanks for all your great work and recaps first, but when stocks moved up large percent-wise like Ren did today, how do you set your stops?
Well, it all depends on your tier size. So right now I'm back down to like a tier 1, so I'll be a little bit looser. When I'm adding a tier or a few tiers as it's breaking out, I definitely get a little anxious because you have a little bit more size than you want, but once it starts working, you sell some. So now I would say, going back to this chart, what you want to do is you want to make sure the trade doesn't change. And right now, it looks as if it's on its way. If you bought today, you didn't really chase it, but I would say you want to use retracement rules. You don't want to see more than half of today's bar give way. I would say if you're uncommitted to this stock, you don't want to see it go below 640, 650. That should be your stop. This would be even a looser stop. I would say 620 is an area that it must hold in order to continue its upward momentum. And that's enough about Renren because, again, we're not talking about the quality of quality here.
All right, well, let's move on to the GLD because we actually have a follow-up from Chart Girl asking, can you explain the inverse head and shoulders pattern that you see in GLD?
This is something we've been trying to incubate and I got stopped out of it, lost money like 2 weeks ago. It's a process that takes place over a period of time, and an inverse head and shoulders pattern is always a little risky because you're waiting for that right shoulder to materialize. And especially with gold, you have a lot of people out there that are saying 2,000, 2,500. Obviously we're a lot lower than that. So some people are trying to think ahead, and when you think ahead, you have to take a little bit of pain, or you have to wait a little bit for it to actually ignite. Recently, though, I think it's been acting a bit better. Now, a lot of people in my community actually started to buy a little bit of it today because of this pattern, and I think it's actually acting better. If you want to talk about inverted head and shoulders pattern, here's your left shoulder, okay? There you go. Here's your head. And then here is your right shoulder. This looks very similar to some of the patterns that I recognized in early December before we had our nice little breakout to the upside. So one other thing you have going on here. So if you're going to accumulate in the bottom end of a right shoulder, some people might have started here and it didn't work. Some people here, I actually bought a little bit here, didn't work. I didn't go back to it just because I've been enamored with other things. But anyway, you now have this intermediate trend line that it's just coming above. So to me, last time I did this, it was a fake out. Okay, last time I did this over here, I was actually in silver and it didn't work. This time it actually poked its head through. So if you look at this huge down day, this compelling day that started to change the new direction, the intermediate direction to the downside, you had a series of lower highs. You had your high here, lower high, like a lower high, and this is the first time it poked its head up and closed. So now I would say if it could maintain above this area, I think you see a new trend, and I think it goes higher. And if you want to take a look at the macro pattern here, which really has a lot of time before it really starts to develop, here would be, you get ready to just say that day, because this was a little bit of like a push-through failure, or this was whatever it was, this was a bait and switch. This is your next level of resistance all the way up here. So for those of you looking at GLD, some people might have went to a tier 2 today. If you did so, I think it's validated. I think that gold is acting better. Typically, in the last quarter, you saw the market go up and you saw gold trickle lower. Okay, in the last day or two, you saw the market also go up and gold held in there and went up. So if the market does turn back down, I do think money's going to go there and you might get better prices. So I think at least you have your stop in place and you know your level so you could stay with that trade.
Okay, well, Apple is sparking lots of questions after showing some relative weakness today. We've gotten questions from Melissa Ruddick, JGL Trader, both noting that Apple seems to be making lower lows this week and asking, do you think the momentum is still to the downside for the short term?
Apple is such a tricky stock because everyone loves it. Everyone's so committed to it. And I love it too. Every sale that I've ever had in Apple has been a bad sale. I've talked about estimates on price expectations and this and that. So typically you like when Apple leads the market. And in the last 2-3 days, there's been more money from the short side than the long side, even though we had a bounce in the market. So you always have to take notice on that. Apple's the kind of stock that it's its own animal, where it could be weak like the last few days, and all of a sudden market comes in and it wants to try and show leadership. So you have to always watch the composure. But according to the chart, if you look here, let's take a look. Obviously you see a really nice steep trend. This trend starting from here has been intact for a long time, since I would say early this year, and we're getting kind of close to it. So anytime you get close to the trend, it's been a better buy than a short, but sometimes these trends change. Okay, and if you want to take a closer look in Apple, you will see that there were a lot of good trades here this week, and they have been to the short side. Okay, when it opened up above the previous high here, if you guys follow me on Twitter, you'll know that I was talking about 639.84. That was a nice trade below. Okay, so you made good money closing the lows. Opened up yesterday. That was even a good short. Okay, but it held the 10-day. Today was a little tricky. Today it sort of closed near the 10-day, below this little area on the trend line. So it'll be interesting to see what happens if it could break it. Apple typically doesn't have more than 3 red days in a row. If you look here, at the chart, you'll see that rarely happens. So you have to be a bit careful when you try and short on weakness. So I would say in the next day or so, watch that 620, 621 level. If it continues to hold it, stay with it. But if you want to look real quickly, I'm going to show you on a 13-minute time frame here. I see a small head and shoulders top formation. Okay, and if you look here, this is like your left shoulder. Here's your head. Here's your right shoulder, and we're coming into a very, very big neckline. We tried to break below it, but the market might have been too strong today. So if you want to give yourself a new area of support, here it is. 620 to 622. If it gets below there and stays below there on a 60-minute basis, not just like a push through and come back up, I do think there's a chance that the measured move of this pattern, okay, which is 640 down to like 620, that takes you down 20 bucks, and that would take you to about 600. And sometimes Apple likes to pull in before earnings, and if you go to 600, that'll take you, right around here. So let's see if that happens. Obviously, we'll cross that bridge when we get there. I'm not exactly sure what Google's doing right now. Then we'll have to revisit that in the morning. But as of right now, small relative weakness. We've seen it before. As an investor, I don't think you worry. As an investor, I still think it's 700 plus at some point this year. But as a trader, obviously you want to make cash flow. You want to be on the right side of the trend. And right now we're kind of breaking the 10-day moving average, which hasn't happened a lot. So if it goes below there, closes below there, look at the 20-day and then look at that 600 level.
All right, we're getting a bunch of questions in about LNKD, wanting to know what the LNKD chart short-term and long-term is indicating. Fuenteza is also thanking you for all your insight and hard work.
Oh, well, thank you. That's why we do this, don't we? And LinkedIn is one of the situations I actually didn't take advantage of. I've talked about LinkedIn many times. I think that it's going to make new highs in the year, but that just shows you how you could have time frames that go against each other. I'm an intermediate trend trader, a momentum trend trader, and when we went into market correction, I loosened up on a lot of stocks that I thought were a bit slippery, one of them being LinkedIn. Last time we talked about it, we were buying it at 98 and we were selling it into resistance between 105 and 110. I'm sure you remember that. So unfortunately, I didn't buy the dip. I didn't buy the gap when Goldman upgraded it, that 95, 96, and then today it was on the move. So if you look at LinkedIn, here you go. There's the overall macro chart. Here is the high from IPO day. Okay, and then we had this nice cup pattern, this cup and handle that I was talking about. This was at 95. Remember that big resistance level we were talking about that we need to clear? Well, we cleared it, and then I sold into this strength because look at the resistance on the side. That was something that was in my face. And then what did we do here? We came back, we retested while the market was correcting this 95 area, and what happened? This gap held. That means the shorts couldn't push it in there. That means the strength was still there. And that should have been your flag or your, okay, get back in. And I didn't. A lot of guys did today. And I think guys in my chat room were talking about getting involved when it crossed this 103 area and it closed strong. So now the next level to look at for a trade would be right above yesterday's high. And then, look even a little bit further. Here is the high of the IPO. And if sometimes these patterns measure movement, and if you look at the depth of this cup from 60 to almost 95, real quickly, what's that? 60 to 95, 35. All right, I just wanted to see if she was sleeping over here.
I'm watching for your tweets is what I'm doing.
So you add 35, and then what does that do? That takes you to new highs on the year, which I do think LinkedIn can make. So if you're a macro investor, this is macro investment quality. It's also a great trading vehicle. So stay with it above this area. The high here is what? That's 110.50. And then I remember this IPO day was very exciting. I remember it opened up around 88, went through 92, went as high as 122 real quickly. I think that'll come into play.
Okay, let's talk Netflix. Always a topic of conversation, always a stock that we like to talk about. MSP Zoom is asking thoughts on Netflix's close below 100 yesterday and then medium volume spike today to about 105.
Okay, well, this stock technically hasn't been it's been trading well, but I would say you have to fragment it. In the beginning of the year, it could do no wrong. It broke above that 75, went as high as 130 and change, did that red dog reversal. We talked about it last week. And then, if you look back at the chart real quickly, you will see the last buyable pattern here, after buying it here, the red dog reversal there, buying it, remember we listed 111. But then what happened was at 123 into resistance, it never stopped going down. Okay, so it just trickled and trickled and trickled down with the market. And then today, with a heavily shorted stock like this, with a strong market, a little bit of volume could take it higher. And if you really just take a snapshot overall, because we're all traders and we love immediate gratification, from the low 60s to here, all the way back to 100, it's still hanging in pretty well. It's just taking a little bit more time. So maybe Coinstar came out and raised their guidance after the close. Somebody knew something and they got squeezed. So it did close above yesterday's high here of 103.72. I would say that there is some room for it to go before it hits some resistance, and that resistance will be these moving averages coming in right around 109, 110. So if you did buy it on the strength today, it made sense. A little bit of a red dog reversal, also showed strength going above yesterday's high, closed strong. I would say first area is about 109 to 111, and then if it really gets going, you have 114, and then we'll have to wait for earnings to see what else the story is there.
Sam Patel is asking, how can you momentum trade stocks like Intel? Can it break out of a rising wedge that it formed since last October to present, or break to the downside? He wants to know if you can comment on Intel in all time frames.
All right, well, that's something we could do. But with mega caps like Intel and mega caps like Microsoft and Cisco and these guys, it's hard to find the momentum. And this year, it's been a little bit easier because a lot of them went in the first quarter. So with Intel and Microsoft and these guys, sometimes they're good swing trades, but only a few times a year can you add tier 2, tier 3 for what could be an exciting tradable move. So if you look at Intel, I've traded it a few times for that type of move, and it doesn't happen often. Okay, last time you saw an exciting move is here, because look, you had a level of resistance here, 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 and then it was trying to poke its head above it, but really couldn't. So finally, when it held higher and started getting above the moving averages, you could have traded this for momentum above 26, and as a trade, you had a nice little move here. But then I remember this day, I was talking about trading above 27, okay, for momentum. You had a green day, gave you another one, but that's all you can get in a mega cap sometimes. And now, I'll be honest, I'm looking at Intel. It still looks pretty good. If you look where it is right now, it's hovering. Actually, I gotta see where it is. It's at new highs. Actually, look at that. Is Intel at new highs in the year in what has been a correction type tape? That's healthy. I didn't even notice that. So if you look at the overall trend here, also from the lows, nice trend, held above the 50-day. So this has been something as an investor on mega caps. It's much better to buy the dip, because finding breakouts are difficult, because a day like today where it has a wide range bar is hard to follow. And before we go to a commercial break, I want to look at the monthly chart here. Monthly chart, it did break out above the wedge, like you said. If you want to draw your lines from right around here, this was right there, and now it's following this trend to the upside. I do think at some point this year, there's no reason why Intel can't make its way up to this prior resistance. This prior resistance on Intel is around 3460. I'd say 3460 is definitely doable.
Felt that commercial break coming, did you?
I did. My forehead gets sweaty.
Keep those questions coming, guys, because we are going to take a quick commercial break. We'll be back to answer more of your questions right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, we're back answering more of your questions live. We've got a question from Shady Capital asking about FCX Freeport, saying it's already retraced its year-to-date move. Do you see further downside, Scott?
Well, today had its first eye-opening day. I look for a day to take notice, some kind of potent action, and I know a lot of people like FCX. They've had success with it, not this year, but in the years prior. So these names, people sometimes go back to a little too early. So I know I tried it. If you look at the chart here in FCX, you will see I tried it right around here. I thought maybe, actually, that's the last time I actually looked at it. I thought maybe it could break to the upside because a lot of people were looking for ideas in the market, and we just kept trickling lower. Today, if you look at this day, it was pretty engulfing. It was a nice day. You look here, it engulfed the last three. And people are waiting for some of these names to wake up. They're waiting for FCX or some of the metal names. And at this particular point, this was a day I would say to cover some shorts if you were still riding the short. Look at this red dog reversal there, guys. Okay, this is a beautiful move that late December, pushed through highs, came back below, never violated the halfway point. So that was your sell setup / short. And ever since then, you have a high, lower high, another lower high. So I would say tier 1 long here, and we want to see if different groups go, in different quarters. Well, we're in quarter 2 now, and this has a nice descending channel to the downside. Potent day today. I would say tier 1, and for it to really start to get going, I'd like to see it get those moving averages back. And I know this is far away. I would say above this area of let me get my Quotron in here so I could see it a little bit better. My eyes are going. This high here is, Brittany?
38.57?
38.57. So if it breaks and closes above this descending channel here, that's when it could go in motion to the upside. Maybe that's where you add. And if you look at the curling down moving average right around here, perhaps this could be a nice, more of a macro target to about 41. So, and then use this as your stop right there around 36. Decent risk reward, but again, this sector has been out of play, and in new quarters you want to see some kind of rotation, and if rotation is going to come to some of the metals or the materials, FCX is something that might be on your radar.
Okay, what about TSLA? We've got a question from Optionaire asking what you think of that chart.
A lot of people have been talking about that like a week or two ago for a potential breakout. I haven't looked at it since. It's not something that's in my wheelhouse of stocks. I actually don't believe in the company, but who am I not to believe in the company when a chart does well? So if you look here at the chart, you will see that, if you look here, let's see what's going on. This is, I think, when people were chirping about it because you had a nice resistance area. This is when it tried to break out. And then on this day, it tried to go and kind of failed. It was flagging here before some kind of news may have came out, and it gapped to the downside. It's at this point, I don't think there's anything so exciting about it. It's below the moving averages. There is a gap in front of it. I would say perhaps it tries to fill it for a trade. For me, I don't really follow the story so close. It looks like a lot of things out there. It's not very compelling as far as a trade. It's something that wouldn't be on my radar right now.
Okay, well, we've got a question from a long-term investor in Cores. I'm going to attempt your name. Abila Shreddy is asking, long-term investor in Cores, can he stick with it even with the choppiness? And I hope I served your name justice.
Well, a long-term investor, the IPO has been out for like not even 6 months. So for me, long-term could be a few days. I guess for you, 6 months or 9 months of an IPO is long-term. So I guess what you're saying is you don't really want to worry about the short-term movement of the stock. You think that in 2-3 years from now, it's going to be a lot higher. Maybe you like their perfume, you like whatever it is. I think, what does Coors have? It has
great clothes.
Great clothes, very fashionable. Yeah, I think I saw perfume on my shelf that my wife has. So anyway, it has acted very well. And they did a secondary, which always puts a little bit of a damper on the action because it creates overhead supply. Looking at the chart right now, I know a lot of my traders have been trading it. Overall, this was when it broke out above that area from the recent IPO. That was a nice, sexy trade. Since then, it's been trending higher. Right around here is when they announced a secondary. From a trading standpoint, when it broke this rising, just a trend line, so to speak, or this is like kind of like an angled head and shoulders pattern where you have like the left shoulder, the head, the right shoulder. This was your uncommitted way out, okay, when it broke this area. And now it's kind of holding the 50-day. I would say if you didn't get out of it, what I'd like to see is I'd like to see this gap hold. If this gap holds, okay, because this is a pro gap, this is a gap that's been controlling the upward movement here. I think if this gap holds, you stay with it. Even as a momentum trader and as a long-term investor, I don't think you have anything to worry about unless all of a sudden this gap gets fully filled. Then the pent-up energy there is going to be let out and it's going to take a lot longer. This gap holds, goes sideways. There will be potentially another trade this year into new highs, and that'll be above 50. So it does need some more sideways consolidation. It's still below the 50% mark of this wide range bar, and it has some resistance. So I think it's going to just need some time. So if you have time, give it, trade it versus 40.
Okay, you guys are sending in some questions about the banks. We haven't really dove into those just yet. We've got a question from Eldad asking, first, for what you think about Goldman Sachs and the banks, are they ready for a quick recovery?
Well, again, it depends on your timing. And for me, my quick recovery was buying some of the banks on Tuesday after a nice pull-in that we've seen. So at this particular point now, it gets a little bit choppy and a little bit tough because you have JP Morgan tomorrow, you have Wells Fargo tomorrow. Goldman Sachs itself has been not acting like a leader, but it gives you trades from time to time, and today was actually strong. If you go to the chart of Goldman Sachs, I'm not sure what I wrote in there the last time. Here was, I guess, the trend line that I drew. Okay, let me draw it again. It's a little sloppy here. There you go. This is somewhat where it broke, and I guess you could even draw it from here a little bit more. And you had a nice little bar today, okay, nice little pivot buy. It went above this area and closed on its highs. So today was a day that if you were looking sideways, I remember talking about 113, 115 could be decent support, and it wound up holding in there. Here's your day one. I think it's got some room back to about 122, but if you're looking for just a trade, that is, to me, the easy portion of the trade. And obviously, we're going to have to see what JP Morgan says tomorrow to see if you can get some upside movement. If JP Morgan comes out tomorrow and disappoints, you better make sure that if you're in this for a swing trade, it doesn't give back more than 50% of today's bar, because then it invalidates its strength. But last time, Goldman always gets it. Last time I tried to play for a breakout, this happened. played it for a breakout, then the op-ed piece happened. So at this point for me, Goldman is just a trade, and if you did take it home long today, according to the good book, because it went out on the highs, I think you did the right thing, and I think that 122-ish would be an area of resistance to sell in front of.
All right, well, speaking of JP Morgan earnings tomorrow, we've got a situation presented to us by MabMab asking, Scott, he bought some Bank of America yesterday for JP earnings tomorrow, so where would you sell if it moves higher?
I actually sold today. So again, but that's my
go.
time frame. I'm also going to compete in the Boston Marathon on Monday, so I wanted to have a little less on my head. So if you remember, in morning call, I think you might have even been here on that day. It was Tuesday. I was saying I think I want to buy JP Morgan into 42.90, 43.10. We talked about the tier system, and it could bounce back nicely. And then today with Jill, I'm like, you know what? 44.60 or 70 is the area. That's my trade. Even Bank of America, I said 880. Didn't buy it because we got a little, more beat up. And then that day we were at the 50-day, and guys are like, you know what do you think of Bank of America at the 50-day? I'm like, well, if you sold 980, you could buy 850s. But now we had the easy part of the bounce back on both of these. So you have to figure out your time frame. Are you a short-term trader looking for that 2-day, 3-day bounce? Or did you look for an entry that could wind up leading to new highs at some point later this year, which we're not exactly sure of yet? So if you look at the chart of JP Morgan first, okay, if you remember, this is the reason why I drew this line here. Okay, remember at first, coming into the correction, this was the first time JP Morgan went below the 10-day moving average, and I sent out a tweet saying, get out of the banks. Some guys actually shorted them. I didn't, because, trading this stock, I got involved along here, got involved along there. I think I sold it into this area, wasn't involved for the highs, but this was a clue that they would come in under weakness. So from 46 down to this support level, it was worth a try. And then I think today I drew this line saying I think that JP Morgan can go up and retest these moving averages, which is healthy, considering it didn't even get to the 50-day. But for me, I didn't want to hold the next few days, and I don't hold typically through earnings. So I sold right into here. So if you're in long, okay, into earnings, you better be an investor, not a trader. Okay, and if you are in, and they disappoint, you could use this area as support. If they all of a sudden, come out good as a trader and you held it and it opens up, this area is going to be some resistance. So you might want to sell some there. And if all of a sudden it's a blockbuster, and it gets above these previous highs, that's going to maybe tell me that the Tuesday lows are the low of this entire move. And if you look at real quickly, I'm just going to show you the weekly and monthly chart, because we're going to start looking at some of those in the financials, which means the market's pretty healthy. You go back to JP Morgan, you go to the monthly chart, and you'll see here we're coming into a pretty big area that hasn't been taken out in a while. So usually you rest first. Like here's, you want to draw this line. It's coming in here. So, it might need more time to trade sideways and hold higher versus this area before it starts busting through. But if it starts busting through this area, you're going to see a hell of a move in the market and the rest of these banks. And now I guess I talked a lot about JP Morgan. Let me give you quickly Bank of America. This thing, look how symmetrical this is. This is why I've been trading a lot lately. When it broke this downtrend right around here, this was the first time I got involved for a Santa Claus type rally or a January effect. And then it had a potent move that said, if it consolidates well, it can go again. That was 815, 825. This was the last time it went, tried to consolidate, but then it broke down like the rest of the market. So what did it do? It came back and retested this breakout area. That's why you never want to chase moves. A lot of people are like, I'm going to buy Bank of America. It's going to 13. Okay, but it just went from 550 to almost 10. Maybe it needs to correct. And that's what it did. It corrected into the moving average. So it was a nice place to buy it. I think that this area, like I had a few guys buy it, I told them to sell today above $9. They bought it at 850-ish, so that's their trade, but that's all they were looking for, but they still have it for the long term. Lastly, this area will be some big resistance. Here is 940. If JP Morgan's good and you played it long to be in something outside of JP Morgan and you're not committed to it, I would sell some into this 940 area because that's going to be resistance because that was prior support, and prior support turns into resistance at first.
Okay, well, here's an interesting one. Spanish bank stocks. Alpha Lobo Trade is asking, do you think Spanish bank stocks are worth taking a look at to start accumulating for the long term at these levels, specifically STD, BBVA, and the Spain Index EWP?
Well, I'll tell you, this is a tiny bit out of my wheelhouse. It's hard enough to trade the U.S. banks. And I do recall, guys, when Ireland went through the big problem, they tried to play Bank of Ireland, IRE, and a few of the other ones. And they were just so complicated and so hard to deal with. So I think you shouldn't make things so complicated. If you want bank exposure, Bank of America is one that's a little risky. Go with that one. Go with JP Morgan. I'll look at one of these things. So you said STD.
Sure.
I don't like those initials. But anyway, if you want to be a bottom feeder, because that's what you'll be doing here, you know, I've seen people try and be bottom feeders in the past, and they get, you know, government support or this and that, and they go a hell of a lot lower. To me, you know, you had a way out right around here when it was wedging, and it started to fail. Now it's down here. I guess you could try for an oversold trade to fill this gap or get back up to this area, but if you're not from there and you have no no rationale for having to be in these Spanish banks, I would say just avoid them. I'm sorry.
Just want to challenge you there a little bit with that one, Scott. Now we've got Stock Day Trader asking for your analysis on Open. Looks like a monster move could be in the works, he says.
Yes, Open has been somewhat out of play, but I've been hearing some chirpings from my chat room, so that means it must be on the move somewhat, and I know it's a very heavily shorted stock, but when it goes, it goes, so I'd love to take a look at it. You go to Open, you look at the chart, okay, it is starting, okay, to break somewhat of a descending channel here, okay, and it did have a nice day today. If you draw your line like this, it's now above some of the moving averages, so it is looking a bit healthy. If you didn't get trapped, okay, in this down move, I think that if I was sticking around and I had a multiple approach or a multiple position approach, which I don't right now, this would be one that's worthy. Okay, it's trying to break this area. Let me take a look at the volume here today. Basic studies, go to your volume. Was there any volume today? Nah, not really. But I think that at this point, if you're long it, I would say use this low as your stop. Next area could be the moving average around 44. And then real resistance comes into play, you know, right up here. And I guess you could sort of say this is like an economy play where if, you know, the economy gets better, more people are going to be booking reservations, OpenTable's there, and, you know, be a little bit of Warren Buffett. So anyway, it's on the move a little bit. I think you could stay with it, but use that area as a stop.
Okay, let's jump into some basic materials. Operation Stackola asking where you see basic materials going. Stocks like XLB, XAA, NUE seems a lot have been in long basing bottoming patterns, he says, with almost no rotation in.
Well, you just said long basing patterns. What was the other question?
Long basing bottoming patterns.
Oh, bottoming. Okay, so I would say when you have bottoming patterns, you wait for some type of ignition. And I did see some of them today. Not like potent and brilliant and, you know, shoot out in my face, get involved. But, you know, if you look at XHB here, you will see that there was a pretty potent update today. Okay, look at the size of this move. So to me, I think that it's worthy of a look. Okay, it's coming back into this base. If you're an investor, that's okay. But in order to really get some momentum, it has to clear this area. It's touching the moving averages. It did test this gap here, okay, and I guess it held a portion of it. I think I was talking about this with Jill, and she likes this area, and usually Jill, Stephanie, and Jim know what they're doing. So if you want to buy something in the base going sideways, here's the ETF. Today was a big, strong day. So something came in there, some shorts got squeezed, so it's worthy of getting back on your radar because maybe it does clear this resistance area and then traders can make some money. But right now, it's definitely worthy of a tier one if you have a multiple position approach.
All right, let's do some more big picture questions here. We've got one from Seeking Beta 1 who asks if you think the VIX is a useful indicator of short-term market moves.
I think it's okay. I think a lot of people think it does more than it does. Where like if people want to hedge, all of a sudden they're buying the VIX, and then the market goes down and the VIX really doesn't go up that much. So as a hedge, I don't think lately it's been working that well. You know, for the hedges that I've used on the pullback, I've been short the spiders. You know, I'm long SDSs. At certain points, I think it's worth looking at the VIX in order to see what's going on, the complacency, the fear factor. You know, but I've talked a lot about the McClellan Oscillator. So that was a big telltale to me when we went down well below, you know, 90 or that oversold reading, that told me, you know what, 5 down days into some decent areas, cover your shorts. I use that as a contrarian indicator, kind of like the put-call ratio. You know, whereas if it's screaming above 1 and everyone's buying puts, tells me we're close to a bottom. And now with the McClellan Oscillator, went from negative 92 on Tuesday to negative 50 yesterday. And I bet you after today, it's almost getting close to flat. So that tells me that, you know, market has a lot to prove. Don't be chasing things up here unless you're committed. And if you look real quickly at the VIX, you will see it's just, first of all, the VIX crashed today. So you could say that on this move, it came into resistance. right, and then just crashed, and that's telling you that perhaps this move to the upside could continue. But again, I don't love it as an indicator. That TVIX, I think, is run by thieves. People were expecting that to be twice the VIX, and it definitely doesn't correlate the way it's supposed to, and that's a class action suit waiting to happen. So don't be as reliant on the VIX, and don't especially just use that as a hedging vehicle. Buy some puts, short some spiders, or do something of that nature.
Speaking of the McClellan Oscillator, we've got a question from Rocky Rosa asking where you get the intraday McClellan Oscillator levels that you tweet. Do you calculate them yourself?
I do not calculate them myself. I do have an indicator where I look. If I told you, I'd have to kill you. So I'm not going to tell you. It's one of my secret sauce scenarios. So if you want it daily, you have to come be a member of the virtual trade floor or look for my tweets. I'm not giving that up. Sorry. Actually, I'm not sorry. But
thought we might be able to get that one out of him. Sorry, Rocky Rosa.
Rocky Rosa. And I love Rocky, so I shouldn't be telling you. But anyway.
All right, let's answer Davamucho, who says, hey, Scott and Brittany, what would be a good level to tier 2 into uprow? My tier 1 price is $79. Thanks, Mucho.
Let me take a look. And let's look at some recent tweets that are coming right now. I'd love to see what they're saying. Is the laptop down right now?
Yeah, we're having a little technical difficulties, but keep them coming. We're going to get it back right after the commercial break. Okay,
here we go. We'll get into this for you. Now, he said he's in tier 1.
He wants to know what a good level to tier 2 into it would be.
Okay, so let's take a quick look here. So let's go to the chart.
His tier 1 price, he says, is $79.
79. Okay, well that makes sense. This was a nice break of this lower wedge. I wouldn't go into tier 2 yet. It's coming into the moving averages. I do think that it's not the right time to be adding here. If anything, if you bought into some weakness, that should have been like your tester. This today, I would have said would have been like a tier 2. I would have actually sold a little bit into strength on the close, and I think you trail some. I wouldn't be in tier 2 yet because I think the market has a lot to prove as we're going to be coming into, like I said here, some pretty big trend lines, and the market has to prove that it can get above here, hold above here, and stocks could continue to break out at some particular manner.
Speaking of using those tiers, Eric B wants to know if you use market orders when you add or remove tiers intraday.
Market orders, like a stop loss or a stop
or
limit.
For stops. When you
okay.
add or remove tiers intraday and for stops.
When I use my tier system, I use them with levels. So typically, like I used with that Ren, or I use like, sometimes I have intraday levels, and sometimes I have daily price patterns with pivot points. So with that said, if I'm in something overnight as a tester, okay, and then it trades through my price point, what I typically do is I go from tier 1 to have me committed to tier 2 through the action area, and then it continues to go. And then that's when I get out back to my tier 1 and I stay with it. And then if all of a sudden I'm playing something for a breakout, okay, and I add to my tier 2, and then it doesn't break out, it goes above the level and doesn't have any commitment, goes back below, I'll get back to tier 1. But I typically do it manually. I'm an old dog. I don't do a point and click. I have a keystroke, so like when I press Shift B, it goes after the inside market, or vice versa. So, when I do leave to go during the day for just say a spin class or for meetings or to CNBC or whatnot, I do put stop loss in. I put them in my system, so I'm not in harm's way. So when the trade changes, it gets me out of it here. So and it also makes me feel comfortable that if I'm not by my computer, I can stay with the winning trade and I just don't sell it because I think I have to be in control. So that's when I use the stop losses or maybe buy stops if I'm short something versus a level. Like I was short today Apple, I had a buy stop, I came back and I was out of it. I was like, okay, but meanwhile it was lower and I was pissed, but there you go.
Okay, keep those questions coming, guys. We're going to get this computer back up and running, tackle some of your more recent ones just right after this.
I'm in a little MGM and I'm still in OIH. I bought it this morning at 107.50.
Apple's good.
You don't buy in the first 5 minutes of the day.
I live in Jersey City. I was born in Long Island, went to school at SUNY Albany. As a firm, we are 5 partners and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is on a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is. You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother. All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265, and if they're right, they make money. It's a good setup. Stick with the win.
Okay.
It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade and I could provide for my family.
MRSA breakouts. That is the next evolution.
We're back answering your questions live. We're back in action here. We've got a question from Peter asking for your thoughts on Zynga.
Okay, well, first of all, I recognize the name, and he's from the VTF. I just want to say he's been a pleasure to have. He was actually off of Twitter. Okay, he followed me on Twitter. He would get a lot of the things that we would tweet. And what we try and tell everyone is that, if you really want our live positions and see them come on and off as we're actually doing it and hear us on the radio, that's the full story. On Twitter, I try and do as much as we can. I only have 2 thumbs, and sometimes they're fat, and I spell things wrong or whatever, and the things are active. So, Peter's on there right now, and he just asked a question, and he's been in there 5 weeks. You could actually ask him about the difference of being on the virtual trade floor, and that's my only sales pitch. The question was about Zynga because he saw me re-enter Zynga today. Haven't been involved in Zynga for a while. Ever since the secondary, it hasn't been acting well, but with some of the smaller guys going and some like LinkedIn going and some of the Facebook type names getting some excitement, I took a look at it and it had a decent daily bar. So if we go here to Zynga, you can look at the chart pattern. First of all, it's been public, also one of those bad new issues that opened up. That's why you don't jump into new issues. And then I remember it getting very exciting right around here. That's when it broke above this little downtrend and then traded above the IPO high, so it squeezed a lot of the shorts. And I remember this nice little wedge pattern. That's when I got involved. And then you had this shooting star top. If you look back and you look at it, it doesn't look that easy. If you bring this chart this way, that's why I love Red Dog reversals, because you could use them as inflection points. And on this one, this was blaring. Opened up, sellers took control. That was your way out if you've been involved since this point. So since then, fast forward, we're now, consolidating. It's trickled all the way down to where it broke out from, and the IPO price somewhat. So right into here, there was some resistance. Some support. But then look at today. Today, you had a nice wide range bar. Okay, it kind of engulfed these 4 days. You have somewhat of a downtrend. I know they did their secondary. The pricing was around 12. So you had some people probably that didn't want to stay involved. So now at this point, I'm in tier 1. Okay, and I would get to tier 2 if we can get above this high here of 1234 and hold above it. Not just tail through and come back down, not just try and get through and close below it. Get above it, stay above it, and then I think the next area will be these moving averages around 13. And then perhaps as we get closer to Facebook at the new issue, it does better, or maybe even as we get closer to its earnings and it proves that it's doing well, because I think what also took the life out of this stock was Groupon and the accounting scenario that they were involved in. So these new issues are hard to trust. So if anything happens in that whole arena of new issues, sometimes people say, I'm going to run for the hills because I want to see a few more quarters come out so I can get some stability and I can just see the institutional support. At this one, I know a lot of people that like it. There's a lot of big money behind it. I know the secondary mostly were all mutual funds, not hedge funds. So I think with the time this one will work out. I was waiting for an entry today. I took it. I wasn't going to be involved in that many things as I leave for Boston tomorrow, but I'm in now. I have a stop at this lower end of the pivot. So here, if you want to look one more time, so you can see, I bought it today probably around 12 bucks, right? I went across around here, and my stop will be the low of this pivot, which is around 11.49. So I'm risking about 40 cents to be involved in a stock that could be a swing trade or even just a bigger move.
We're getting lots of questions on MasterCard and Visa. We've got Fat Dirt and Jeff MC showing us some love, supporting the show, appreciate it, and asking for your thoughts on both. So which one do you want to start with, Scott?
Let's go with MasterCard first.
All right, let's do MasterCard.
Both of these stocks have been institutional favorites. They've been on the IBD 20. And they have made new highs every few months. They make new highs, and they've been great for macro investors. As a trader, there's opportunities, and as you get into a correction type of scenario, sometimes you have to be a little fearful. And if you look at the chart of MasterCard, looking at it right now, I haven't been that active, but you could kind of draw a trend here since the last time it broke out. Here was your last breakout, right around here. Okay, obviously this was like your downtrend breakout, and since then it's been riding an uptrend, right? A nice 45-degree angle uptrend. A lot of things pulled in to test their 50-day. This didn't even come down to the 50-day, so that's still showing you relative strength. This bar right here was, as a trader, was a little scary, right? As a trader, you said, uh-oh, look at the size of this wide range bar right there. It just engulfed these 4 days. So I'm sure a lot of people were probably thinking short if it went below it, but it opened up above it yesterday and it's still there. And I just think that it's, in this trend, in this channel, investors are okay. And if you're not committed to this long term, if it were to break this little trend line, you could see a move down to the 50-day. And then you also could probably see a move down to retest this. But as of right now, it's just following this uptrend. There's some intraday action, but I think it's still a leader, still institutional quality, and it hasn't shown any signs that it's not. And I guess if we go to look at Visa, which is part of that group, if you look here, you'll see this too. Very, very choppy though, I'll be honest. This, kind of the same thing. Here was that day where it definitely shook some people up, because look what this did. If you want to draw a closer trend here, okay, which shows you sometimes if you're too tight, you can get hurt. And this bar would have got me out of it if I was holding it for a swing trade. And then all of a sudden you had an inside day, and today it popped. So you have to know whether you're a macro investor or a momentum trader. So this would have got the momentum traders out. And if you were a macro investor trying to be cute, all of a sudden now it looks like Visa's going to be on its horse again to make new highs, and you're not there. That's kind of what happened to me with LVS. LVS, I've been saying it's a macro investment. Stay the course. If you're a macro investor and you have 8 to 10 stocks, there are times to be in tier 1, times to be in tier 2. For me, I was a momentum intermediate trend trader, so I tried to be long LVS all the way since December. So for me, on that day, Tuesday, or when IBD puts in correction, I got rid of some, and now I'm not involved. So, and it's hard to re-enter this trade. So if you look here on LVS, same type of thing. This day is what got me out of the stock, and rightly so. It looked a little scary. This was the day that it broke out, okay, and we added to it. It got above this previous high. This was the day that it was an ugly day in the market. Leaders looked like they were getting hit, and got me out. And then all of a sudden, we're back up to new highs. So if you're a macro investor, you're still sitting pretty as a momentum trader. You could be getting chopped up, and this, I would say, is a decent trend line to follow. It's above both moving averages. It's not even tested the 50 days. So LVS, if you have a longer term time frame, just sit in it and then trade around it. For momentum guys, it's been a little choppy lately. You
stole my next question, because we had one from Rat Jebber who said he knew you wanted to talk about LVS, so that's what I was going to ask you next. But because you already got to that, let's tackle the coal sector, because we've got one again from Mab saying JRCC. Can you take a look at that one?
This coal sector has been left for dead, and to be honest, I hate the sector. I went to China. I was in Shenyang, and they still burn coal. I went for a run. I was coughing up blood. You can't even see straight through the smog. Not saying that's all that coal does, but it burns gross. And I think over time, it's something that doesn't deserve your attention. If you want to look at JRCC right now, that was just my thoughts, and that, I guess if I shouldn't say them out loud sometimes. Look at this stock here. It's been just trending lower. Yes, it's off the lows. It's really not that compelling. I would say stay away from this group. I guess one man's trash is another's treasure, and it was as high as 11, and it's coming down. But nothing really I could say here except for 535 is resistance, and then here's 589, and I guess you could say this is somewhat of a trend to, if it can get above and stay above, it could change for more movement. Not much to say here. And again, if I, did I disrespect anybody about the coal sector or my thoughts?
I don't think so. You're sharing
who wants to be in a city and look at personal smog and cough up blood? I guess it's something that makes common sense, but okay.
All right, let's go on a completely different note and answer a question
no tobacco stocks or coal stocks. I don't want to talk about either one of them.
All right, well, even aside from specific stock questions, we've got one from Market Picker who really just wants to know what the main things are that you look for when you're going to buy a stock. Do you look at the volume, the breakout? What are the most important aspects?
Just how it's acting and the chart pattern. And it depends on what stage of the market we're in. If we're in a market uptrend, I want to make sure that it's trending. If it's trending higher, I like to follow the 10-day and the 20-day. Usually they're the strongest trend lines to follow. You know, when you have a breakout, you tend to want to see it clean. You want to see volume. You want to see it close on the highs. Stocks, you know, we hate when you play something for a breakout and it makes a high on the day at 2 o'clock, and then by 4 o'clock it closes off the high. Same way we hate that on our P&L, where if you're up a certain amount and you give it back, it's just psychologically, it's not what traders like to do. We hate closing off our highs. So, you know, and then patterns. I like nice tight patterns, okay, that are under accumulation, and when they break out, I love to add to it on the breakout day, stay involved the second day, and sell on the third day. And then if it could hold higher and flag again, I'll go with it again. So a lot of different patterns, a lot of different situations. Obviously, everyone knows I love the red dog reversal. That's a big pattern. You know, if we've been going up for a while, it could show you a short-term top. If we're getting crushed, it could also show you a short-term pivot bottom. It's a good day-and-a-half strategy, and it also could be an inflection point swing trade for higher prices. If you want to look at the real definition of a red dog reversal or an outside day, we have them all over our site. You can definitely take a look, and you can also sign up for the 30-day free trial, because all of these, you know, type of tactics are in there, and then obviously the real course.
Let's touch on the tier strategy, the tier system one more time, because we've got a question asking, what are the size of most of your tier 1 trades? Can you even make that assumption?
Well, again, I can, but again, it's different for everyone. I went over this last week. We talk about tier system because I want you to think about it in terms of conviction. I want you to think about it in terms of pattern, because my tier size is different than your tier size, right? You trade with 100,000 share blocks, and the guy to my right could trade with 100 share blocks. You know, so it's different. I want it to be people to relate no matter what they do, okay? Because again, to be a subscriber at our site, we don't charge someone more money because they manage billions or because they have an IRA with $20,000. So tier 1 typically means you're involved, you like the setup hasn't triggered yet. Then tier 2 is when it triggers above the action area that you see on your price point sheet and gets in motion. And it gets in motion for a nice push to your next resistance area, and then you sell some, so you book some. So I'll go to Renren, for instance, because it's something, something that's pretty relevant, okay, just to show you the tier system. So in this chart, okay, I like the base. I like the fact that it was going sideways, around $5. Yes, you had a few different tries where it didn't work. This one I remember, I was in tier 1, went to tier 2, I got hurt. Wasn't ready to break above yet. And then I started staying away. Here, I was in tier 1, went to tier 2, and then I went back to tier 1. Okay, not working, just looking out of the corner of my eye. For some reason, I thought I was going to get ready to go. And then here is when I went to tier 1, okay, on this day, because it started acting better. This is when I went to tier 2, because I liked the way it cleared. It was a day that we were getting crushed. Remember that Tuesday, we were down like 150 points, and it was green. It was up 3-4%. So I was in tier 2. Okay, I went home in tier 2. It opened a little bit lower. I added to it. Okay, and then into this day, I probably got back down to a tier 1. So I literally held tier 1 from about 590 all the way to where we are today, around $7. So holding tier 1 for a nice part of the move, which is probably about 14%. But then I had a cash flow tier, from this area to about this area that's already booked, that if we do go sideways and just say reset up and just say you see a few days like this and it flags, maybe it goes sideways here, and I'm sitting in my tier 1 because I don't care, because I had tier 2, tier 3 and made 10%. Then next time it goes above here and proves it's worthy, I go from a tier 1 to a tier 2, then perhaps it goes to 734, and then I sell that extra tier, and now I've been in tier 1 from about 590, 610 all the way to 730 while booking some money along the way. So by using the tier system, it gets you involved in the stock, it makes you have to watch it, and it makes you be able to, you could hold something longer because you don't even realize you're holding it, because when you take size intraday through the setup, that's when you make your cash flow, and then you book it, you have it in the bank, and then you stay with the original shares for what could be a bigger move. So you have your micro move and you have your macro move, and the only way you're going to hold for a full macro move is by taking trades along the way. I'm so against all or nothing, because I'm telling you, if you put it on and you don't take anything off, you can get shaken out, and then all of a sudden it goes where you want it to go, and you won't have the shares that you thought you could hold on to.
Okay, what about CZR, closing at its highest price of the year today? Trade the Market wants to know what your thoughts are.
My thoughts are I wish I still had it. That this came on the radar because I love this sector, and I saw it as a new issue. I waited for a nice tight pattern here. If you look here at the stock, there's a lot to like. It's been trading really well technically. This was that, again, why you don't chase stocks on first days. It dribbled lower, dribbled lower. This is when it woke up, gave you a quick 2-day move, wasn't ready, consolidated nice and tight. So again, here's your tier 1. You're in tier 1 waiting. You're waiting, waiting, waiting. When it started to go on volume, this is your tier 2. I remember I took tier 2, and then it closed near the highs. I went back to a tier 1. Okay, so I just held tier 1, added tier 2, booked tier 1, then it flagged again. And remember, I was talking about 1350 as another area in order to add. So here you're in tier 1 as you wait, because you're comfortable waiting in tier 1, not in tier 2, tier 3. Went above this pivot here was 1348. You add to your tier 2. I remember doing it that day. Sold some above 14, got back to tier 1. And then on this day, I actually got out of it because I thought that they announced a secondary. I wasn't sure. So PS, I got out of it. But I would say, who cares what I'm doing? You're asking about the stock. It's flagging again. It's above all the moving averages. Had a nice green day. If I were trading the stock, I would be in a tier 1. Okay, and then once it traded above this prior pivot, okay, which right here is just say 1574, you add to tier 2, then perhaps it goes into the 17 area, you sell some, hold some, and then your next point of reference really doesn't come back until this area. I think that it's acting very well. Obviously, it's a new issue, so it still has to prove itself. It's very thin, so you want to make sure not to have too much so you can control it. I did hear that they're doing a secondary, and ever since then I haven't heard anything since. Look at the volume that came in on this day. This was the day that kind of pushed it higher and cleared some stuff out. So I still think it's acting well. Perhaps this stock could be a double or triple in the next 2 to 3 years.
Okay, well, it's almost time to go, but before we close up for the day, we've got some supporters wishing you good luck at the Boston Marathon. Even a quick question from Zen Profit, who wants to know if this will be your first Boston Marathon.
Yes, my first Boston Marathon. A year and a half, actually 2 years ago, I did New York City Marathon. I was a coach for the American Cancer Society because my wife, thank goodness not, but even worse, my mom had breast cancer, and she doesn't have it anymore. She's in remission. So I was a triathlete at the time, and I said, you know what, I want to coach for the American Cancer Society because my mom was going through chemotherapy for her breast cancer, and I became a coach, and I was the performance coach. And PS, trained about 15 people at a PR in the New York City Marathon. I also qualified. I needed a 3:15. I got a 3:13. It was tough to hang on. I did it. I was psyched. That was 2 years ago. 2 years later, haven't been training as much as I wanted to. I thought I would stop drinking about 2 months ago, and I had wine on Tuesday on date night. So I'm not doing everything they should be doing. So on Monday, I'm just looking to run Boston. I'm looking to do it comfortably with a smile. I think my goal is going to be 320. If I did 313, in peak performance, I think I could do 320. And overall, it's really not even my A race. My A race is going to be the New York City Ironman in August, and that will mean that I have to be able to swim 2.2 miles, bike 112 miles, and then do a marathon. So I want to make sure that I survive Boston and then get training for that.
Well, we got a lot of people rooting for you, so
Thanks.
Good luck, buddy.
Well, I'll give you the bib number. I'll give it to Vicky because Brittany won't be here tomorrow, and she'll put it in. So if you want to track me, you'll know what type of day I'm having. If I'm shooting for a 320 and all of a sudden, you see 4 hours and something, I won't be here Tuesday.
All right, well, tweet Scott your support, wish him luck, and keep sending us your questions, and we'll see you guys next week.